Hey everyone, as you probably already know, Tesla reported fourth quarter and 2023 earnings results that sent the stock price crashing. But despite the bad news, Tesla CEO Elon Musk remains as enthusiastic as ever. You're not going to believe what Tesla CEO said about Tesla's stock price and Tesla's value in this video here. So I'm going to go through what's going on with Tesla, why the stock price is crashing, and tell you and discuss this comment from Tesla CEO Elon Musk. So let's jump right in here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So before we get to Elon Musk's comments, I want to highlight something that can explain why Tesla's stock price is down so much. So here I have the outlook from Tesla's shareholder letter in the third quarter of 2023, talking about they were planning to grow production as quickly as possible, trying to grow at a 50% compound annual growth rate target. Now, I had been calling and predicting that Tesla would remove this statement from their shareholder letter all year long. In fact, in the fourth quarter of 2022, I predicted that they would remove this in 2023. And in the fourth quarter, they did in fact remove that statement and replaced it with saying that they're in 2024, their vehicle volume growth may be noticeably lower than the growth rate achieved in 2023, which was already below that 50% target. So in my opinion, this is the big factor that sent Tesla's stock price crashing following the earnings results. So now let's get to Elon Musk's commentary on Tesla's performance and the statement that he made that was absolutely shocking to me. Elon Musk saying that in 2023, they achieved record production and deliveries of about 1.8 million vehicles. And that's what I was predicting all year long, that Tesla would reach their production target of 1.8 million. That was the estimate, and they hit that estimate. The only question I was considering for the year was at what price? How much would Tesla have to lower prices to hit that target? And as we learned in 2023, they had to cut prices a lot. And so by the fourth quarter, they've reached an annualized run rate of almost 2 million cars a year. So while Tesla didn't give a prediction for how many cars they will produce in 2024, I think it's going to be at least 2 million. Prior to the fourth quarter earnings results, my estimate was that they were going to produce somewhere around 2.3 million in 2024. But given how poor this fourth quarter went and the lack of demand for electric vehicles compared with the increase in supply from automakers worldwide, I'm going a little bit lower than 2.3 million for 2024. I don't know precisely where yet, but for now, I would say somewhere between 2.1 million units and 2.3 million units for 2024 for Tesla. Of course, that's my prediction, not what Tesla has said. Its energy storage business delivered 15 gigawatt hours of batteries in 2023 compared with 6.5 gigawatt hours. That was great news for Tesla stock investors in that the other parts of its business are growing nicely to make up for the flat level of vehicle production, of vehicle deliveries and vehicle revenue. Tesla saying, Elon Musk saying that the next growth wave will be driven by next generation vehicle, energy storage, full self-driving and other projects. And they're trying to execute that as well as possible. And they released the self-driving version 12, where they replaced 330,000 lines of C++ code with neural nets. Now, it's important to remember with all this talk of fancy technology from Tesla, as Elon Musk likes to do, we have to make the connection to what a customer is willing to pay for. What is it really that they created that will get customers to pay for that service? What kind of self-driving is this? Is it really full self-driving, or is it just self-driving assist, right? And how much are customers willing to pay for this? And are customers willing to pay enough for this service to make up for the billions of dollars in investment that Tesla has put in? That remains a question mark. So I like to bring that up whenever Elon Musk talks of this fancy technology or some fancy robotics that he's developing for Tesla. I try to make the connection of what's really here, that customers would pay money for. Because you don't want to overserve the market. That's a business mistake where you produce this incredible product or service, but you don't have a buyer. You just have this great technology and service, but you can't make it at a low enough price to get customers to pay for it. And so you've just wasted billions of dollars on this technology that's only going to serve only the very well off or the very early adopters of a new technology. And ultimately, it's not going to grow to a scale to make up for that investment that you've put in. But to Tesla's credit, so far, the investments that they've made in electric vehicles, in their technology, has resulted in a market for their products. They've done a good job increasing profit margins, increasing profitability, increasing cash flow over the years to make up for their investments in their manufacturing technology, in their next generation, in their innovative electric vehicles. So far, you've got to give them credit for their achievements, but at the same time, you've also got to be skeptical when they invest billions of dollars in this new technology that is not yet proven. So they updated Model 3 in the latest quarter. While the car looks similar, a lot of work has gone into the vehicle to make it better in every way. It's significantly quieter, more refined, better equipped, and has longer range. Unfortunately, so far, demand hasn't increased because of these improvements. Tesla still had to cut prices significantly, and Tesla still demand looks weak. And given that they're warning investors that 2024 demand is going to be, flat-ish or grow slightly, grow less than last year, doesn't look like this model refresh is doing anything meaningful for customer demand. And so they're highlighting that they're very far along with their next generation low-cost vehicle. And this could be a major catalyst for Tesla. There's been rumors that they're going to launch an EV that's going to be priced around $25,000. If they can do that, that could certainly unlock the next level of customer demand for electric vehicles, because right now, EVs are more expensive and more inconvenient than internal combustion engine cars. Even with the hundreds of billions and trillions of dollars of government stimulus and government incentives, EVs are still more expensive and less convenient than internal combustion engine cars. And that reality has to be surpassed before EVs can get really broad market adoption. And so this next generation vehicle, if they can hit somewhere, even if it's not 25, even if it's 28,000, right? Anywhere in that range will do a big, big favor for the adoption of electric vehicles worldwide. Elon Musk saying that perhaps the most important competitive characteristic of Tesla in the future will be manufacturing technology. And I agree with that statement there. I rarely agree with Elon Musk, but this statement I do agree with, in that Tesla's competitive advantage is its manufacturing technology. It can produce its EVs at a lower cost than many of its rivals. And that's the advantage, the technology to be able to produce these vehicles at a lower cost and therefore allow it to sell it for a lower price and gain broader market adoption. That's the advantage. It's not any of the other AI or robots that are doing some. It's this, the cost to produce vehicles, that manufacturing technology, that's Tesla's competitive advantage. And finally, we get to the statement that I found to be shocking, and especially coming off of a quarter as disappointing as this one, after they give 2024 guidance disappointing investors, the stock price falling by more than 10% on the day following the report. Elon Musk saying that I do see a path where Tesla could one day be the most valuable company in the world. And while it does surprise me on one side, on the other side, Elon Musk is the ever-present salesman, always hyping up Tesla, always hyping up the prospects in the very distant future so as to keep investors engaged and keep investors excited through these periods of poor performance, lack of profitability, and decreasing cash flow. So on the one side, it is surprising. On the other side, following Elon Musk for a few years now, not that surprising at all. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.